Welcome, and you are listening to and watching the Financial Survival Network. I'm Kerry Lutz, and well, we're recording this on Thursday. You're probably going to see it on Friday, July 3rd. Really happy to have with us again Henry Weingarten. Henry, you are Managing Director of the Astrologers Fund. We talked a while back. You made a number of calls, as by your own reckoning, about 80% correct. So we're now, as Yogi Berra would say, we're at a fork in the road. And as Yogi says, when you come to a fork in the road, take it. So what is the market fork here, Henry?
All right. Well, the thing is this. It's a question of risk and reward. If you look at the economy in the U.S. month to month, it's looking very good. If you look at it from a year-to-year basis, it's obviously in great difficulty. Our forecast for this year were for a down move in the beginning of the year, February, March, which we got more than we expected. But again, we're expecting the same thing in August. So there are many, many reasons to be very cautious in July and August. Most of the market professionals I know are raising cash, writing calls, buying puts, being very defensive for the next 2 weeks. Our target close, which is similar to many analysts, is about 3067 on the S&P. As we're talking now, it's about 3100 and change. So there's very little upside on an intermediate term basis. So the risk is there significantly. And as they listen to this, I would definitely take profits or at least put stops in. I know you like gold, and I do too. We had that drop that we were forecasting. We're very, especially in silver. We managed to get some silver at 1180. But when we hit the fall and when we hit the winter, it's going to be certainly 1800 and probably 2000, perhaps more, especially if inflation hits, which eventually it will, and especially if the dollar drops, which it may or may not. So the risk is for another month or two in gold and silver, but you definitely want to have some if you don't. And certainly from September through December, we'll have a big rally in both of those.
Okay, so here's a question for you, Henry. And I do respect your opinion in these matters because you've been pretty much right here. Gold and silver. So gold has the advantage, well, it's the first mover. It's the king of currencies, if you will, and the king of money. There's a difference, but don't hold me to the difference between money and currency. I know the difference, but opportunity-wise, we got a gold to silver ratio bordering on 100. And really, it was only higher a couple of months ago when the price of silver crashed and the price of gold went down a little bit, but came back. So what do you buy here if you've got your choice? If I'm Joe Sixpack, I got $5,000 cash. Okay. And I know this is coming. Gold, silver.
Okay. Well, the issue is the following. We have to remember that silver is also an economic metal. So if you believe we have a V-shaped recovery, then you immediately want to get into silver. If you think that it's going to be a long, drawn-out, uneven, unequal growth, then you'll wait a little bit. I believe silver will do very well September, October. It will be okay here. We're hoping for a little pullback in both before we buy again. But I would say on a 6-month basis, silver probably would outperform. But on a short-term basis, it may not. If the markets go way down in August, and there's a very high probability of that for many reasons we can discuss, besides astrology, then silver will drop again. You'll have a better opportunity to buy. So it depends on your time frame, if it's short, intermediate, or long term.
Yeah, well, assuming if you're buying physical, you're longer term, right? And absolutely. Yeah. So
if you're buying stocks, because there are some good stocks out there as well.
So what about August? You're predicting a major market breakdown?
High risk? No, we're only saying 8 to 10%. So we certainly think we're going to see 2,900, 2,850 on the S&Ps. We were short. We moved several times from 3150 in the S&Ps, from 26,000 Dow, can drop 1,000, 2,000 points easily. Now, we have the same view in the winter, February, March, and it went down a lot further than we thought. It's possible we'll be correct and the market will go further. Then there's this tremendous risk there. But certainly, there's a high likelihood it's going to go down because, with the exception of a few companies, most of them are not going to do well. Now, the other thing is this. We have 4 sectors we like, and we've changed one of the sectors. When we spoke before, we said we like mining, precious metals, did well. We liked healthcare, did well. We like entertainment, did well. And we like technology, did well. Going forward, we're substituting, and we'll say why in a moment, we're substituting the healthcare and instead safety and security. Unfortunately, you know why safety and security.
Yeah, I
And
live in Florida, so I know all about it.
now with healthcare, if the Democrats come in some way, a lot of those companies, especially biotechs, will not do as well. So there's a tremendous risk. We like to take as little as risk as possible. So we're downgrading to some extent the healthcare stocks and substituting security and safety. Now, if you want to be really conservative, you can always buy things like water utilities, corporate bonds that are AA, et cetera. So it depends, but you want to be in the next 2 weeks. Think about it. What did you want to be in the market in February? Were you happy what happened in March and April? If you were really happy and didn't bother you at all, then don't listen to the word I'm saying. But if you were a little concerned, as we were, then protect yourself in the next month or two, be liquid, get some of the precious metals, get some entertainment, get some safety and security, or just wait for the annual correction. You know, every year the markets go down, August, September, October, then wait and come back in them.
So let me just go over the 4 sectors that you're espousing now. Obviously, safety and security, water, utilities, and AA.
No. Okay. Right, that's an area, but the 4 big areas are, as you said, primarily entertainment, precious metals, some technology, and safety and security.
Some tech. So when we talk about tech, we talking big tech? We talking Fang Stocks,
no,
Amazon?
Actually, we're not. We think Fang Stocks are overdone, and they may be hit in August too. Think about this. Apple could be subject to what happens in China. The big 4 could be very well subject to, if they don't change their views about what's politically correct, they can't have it both ways. They can be a platform, or they're entitled to have their own views. But you can't have immunity, have your own views at the same time. So, and you know what's happening in Europe as well. So they're going to be subject. Now, intermediate long term, I think they're fine. Short term, I think they're under risk here.
Okay, precious metals, and that applies both to holding physical precious metal in your hand, because it's not real unless you can hold it, obviously, although ETFs, et cetera, can be really great trading vehicles. But if you think you own gold, forget it. And we're talking mining stocks as well?
Yes, preferably production or near production. We like a lot of the very speculative stuff, but there's no reason for the speculative stuff right now. So you basically want to have production or pre-production. So, or royalties. Royalties do nice things.
Oh, I love, to me, the royalty business in precious metals, and I've worked with them before, because you get all the benefits of being a miner with none of the burdens, and you can diversify. Like one company I loved it when it was $4 after the crash. I should have bought some more of it, but I didn't. Was Sandstorm Gold. It was at $4. Actually, it was down to 3 something, but you couldn't. That was catching a falling knife. You couldn't get it at that price. $4. It hit 9 recently. I haven't followed the daily machinations of it, but it's a beautiful thing. They have 188 royalty properties, streams, and they just sit back and people send them money and gold every day. Yeah, it's a beautiful thing.
Yeah, there's no question. And there's a bunch of them. We like the much higher risk ones that can be 5 to 10 times. But then they may not go up. Even in the royalty metals. There are some, but it depends on your risk reward. If you're doing it for the safety, though, you don't play that. You play the more intermediate ones, like the ones you mentioned.
But getting a Sandstorm or Franco-Nevada, whatever, on a pullback.
Absolutely. Or Wheaton Precious Metals.
Yeah, Wheaton, of course.
Eagle. Any of the big boys on a pullback are worth it. Or some of the very baby ones, like there's one GZZ, which is a very baby one that's maybe 50 cents and so forth. Bees, a bunch of them. But again, you have to do your risk tolerance. You definitely want to own some gold or silver, and certainly in December you're going to be very happy. Whether you buy it now, wait a month or two, which is what we're doing before we add, you're going to be very happy in December. Almost guaranteed, as much of a guarantee as I can give you.
I couldn't agree with you more. It reminds me of 2009. and 2010, this market. Gold's behaving exactly the same way. And the lead analyst for Kitco, and I understand he's talking his book to some extent, but that doesn't, he calls it up and he calls it down. His prediction last year was that gold would close out the year at 1550 the ounce. He was a little above at 1515. It's 35 bucks high, which is pretty darn good, only a couple percent. This year, and he surprised me with this call. I don't know why, but he surprised me with it. 1911 is his call. Whether he's right or wrong, I don't know, but it's interesting.
Yeah, the other thing is almost all the big houses have targets of close to 2,000 up. Goldman Sachs, their 3, 6, and 12-month targets are 1,800, 1,900, and 2,000, and all the big houses are very similar. They have targets between 1,800 and 2,000 for this next 3 to 6 months. So when you have a lot of the big boys doing it as well as the individuals, it's very different. Let me talk a little bit about August, though. Besides the astrology, there are a couple of reasons to be concerned. First of all, you're going to get the results of the last 3 months. It comes out July 30th, what the GDP is. It's certainly not going to look good. That's number one. Number two, you're going to have Joe Biden giving his vice presidential pick, which I don't think is, for some people, they'll be very happy. Other people will not be happy. You also have a number of other reports coming out. We have the earnings reports, which start in the middle of July. They're good. The second half ones are never very good. Okay. And there's several other reasons. We're giving a talk on July 15th, a webinar, which we'll be posting. And we'll be giving all the reasons. But there are a number of possibilities, all of which could be negative surprises. Almost none of them can be positive surprises. So August is going to be a rough time, plus no one's around. You have volatility above 30. And you can have some very wide situations. So if you don't want to sell in May and go away, or sell in July and go away, you have to have a strong stomach.
Okay, so, interesting thing here. So everybody's been in lockdown mode, and normally this trading week on Wall Street, and I use Wall Street in quotes because Wall Street is really just a stage setting now. No trading takes place there, and it's like they got the guy that rings the bell, and then I think they've got a bunch of actors on the floor because there are no physical markets for securities anymore. Let's face it, it's all electronic. And I'm digressing, but my point is that July 4th week generally seasonally is an extremely low volume setup. Not this week. The volume's been higher, and I wonder if it's Robin Hood kids in their parents' basements driving up the volume. Is it high frequency traders, or is there something going on that we don't understand yet?
Well, I think the volatility is the reason. Any given day, I can choose to be very optimistic or very pessimistic, depending which news I want to focus on. And if I can show something, when I first started the markets, I was given a lesson, and that this is how Wall Street works. They focus on one thing and one thing only, and they ignore everything. But I learned something else, and that is they also are like this.
Yeah, blinders, right?
So effectively, if tomorrow there was an 8:30 report that could be horrible, I could be buying the market like crazy till 4 o'clock today, because it doesn't matter. And then tomorrow it all changes. So again, are we focusing on the month to month? And by the way, the month to month comparisons will not be so good in August as they were obviously in May, June, and will be partially July. Now July won't be so good because of all the lockdowns. So the month to month is not going to be as good. And the year to year is certainly not good. So if you want to focus, no matter who wins the election, 2021 is a tough year. No matter who's in charge, no matter what policies you put in, it's a very tough year in the markets. There'll be big winners and big losers. The other thing is we're not going into a quarantine. Once the market goes down, as we believe it does in August, we're not going to do another quarantine portfolio, but a recovery portfolio. But again, the recovery is going to be very uneven.
Yes.
If you look at the bankruptcies, which unfortunately are going to be rising all over the place.
Oh, they have to.
Right. So a lot of trends that, let's say in retail, all these companies going bankrupt, a lot of this was a 5-year process that's now happening in 3 months. So a
Very
lot of
good
this that
point.
was expected by analysts in the next 2 to 5 years has now happened
Okay.
precisely.
So one interesting thing that's occurred since the crash is home building stocks
Yeah.
have been on the rise. They've gone up 80%, some of them.
Yes.
And is this mass delusion or is it strictly an
No, it's
interest rate
actually,
play?
no, it's two things. Interest rate is part of it, but you also have the issue in New York, for example, where basically things are down about 25% in commercial and 17% this month in residential. People are buying in the suburbs and the ex-suburbs because if you're going to be locked up, which is not something I want to do, you can see me in outer space, so I refuse to be locked up.
Yeah.
Effectively, you want a bigger house. The trend has
Yes.
been recently in the last several years to go to smaller homes. Now,
Yeah.
because of the possibility of COVID, which you and I both agree is a little overdone, to put it mildly, people are going to buy for bigger situations. So housing short term will do very nicely. Also, the fact that people couldn't sell anything for 3 months, courts were closed.
Yes.
So in a short term basis, it will do well. I'm not sure about intermediate term because a lot depends on infrastructure. A lot depends on the election. To me, everything changes after the first week of November.
And the interesting thing, people are moving to the burbs and exurbs for
Right.
safety, more sense of community, less likely to have roving bands of criminals attack you and try to burn your home down and your property. And the other interesting thing is we could be seeing a return to multi-generational homes.
Yes, most definitely. But the interesting thing is, I don't know if you know that because of some of the multi-generational homes, they've been the hardest hit due to COVID. So not only people who are over 80 and in
Yes.
homes, but people like in the Latin community, when you have 10 to 20 people in a single house,
Hmm.
has spread it. So there's an interesting dynamic there, plus or minus. But certainly multi-generational homes is coming back, no question. Our
And
neighbor up in
that's
the country has his kids just came back from the city. We're 105 miles from New York at the moment for the
a
month.
good move.
And the kids are just back for the last 3 months from New York, and they're just staying with the fathers.
That's great. Well, my son was with me. He lives and works in Europe. He came here. He stayed for 3 months. Um, I haven't had any of my kids living with me in 8 years since he went off to college, and it was okay. But I'm not ready to take that giant leap backwards. Even though I know for the strength of communities, multi-generational homes are much stronger and much more supportive for the children, if there's young children there, and for all parties concerned, because everybody has each other's back.
Oh,
And let's
absolutely.
face it, and when times are tough, generally the only people you can really count on is your family.
And after all, grandparents are the best babysitters, lowest cost too.
They are the best. I mean, my grandmother lived with us when I was growing up. I was kind of resentful about it a little bit because she was a buzzkill on all
Yes.
the trouble I wanted to get into. But yes, for sure, the lowest cost babysitting. They got skin in the game and love. And so these trends that kind of ripped apart the family, well, inflation was like the number one cause of family destruction because then the mother had to go work to support the family, and then that left the latchkey kid in the daycare center as a
Yeah,
locus parentis.
absolutely. So hopefully, at least some of your audience will be at least protected financially, and basically prosper. Again, these are very tough times, but there are opportunities as well. There's a
Yeah.
lot of things to be able to buy, but be cautious. Certainly not have a lot of debt if you can avoid it.
Hey,
And no question about that.
one thing I just want to point out to you from a global perspective, and it's being hushed up. The mainstream media hasn't covered one single story on it. I'm going to be doing a special segment in a little while about it, and that is Three Gorges Dam in China. All right, it's in danger of collapsing.
Wow.
This is from the hydrologist who helped do the initial feasibility study. We've got massive flooding in China. Originally, they said the dam will sustain a 10,000-year flood. Then they said 1,000. Then they said 100. And the latest was, hey, if there's flooding, you're on your own. We don't think the dam can contain it. At the very least, I think that the water is going to go above the dam and overwhelm it. At the worst, it could. It's got all these problems, Henry, from
China
its initial construction.
last year and this year, China has many, many problems, and I'm not quite happy with the way they're dealing with it at the moment. But both
Yeah.
politically and economically, China is under tremendous stress.
Yes.
No question about it.
And it appears, well, we know from history that every time China has had a cataclysm, dynasty changes. And the communist is just another dynasty when you get down to it. Plain and simple, just with different rules than patrilineage, which you had with the emperors. So
Yeah.
this is something to keep an eye on, and it could happen in July or August. The flooding is, like I said, they had bridges that were built 400 years ago that have been knocked down by the floods. So that means it's a 400-year flood, and it could be 1,000-year.
Yeah. Yeah, very interesting comment. Thank you. We'll take a look at that.
Yeah, I'll send you a link to my my little blurb on it. I've analyzed it, and as they say, danger and opportunity. We'll just have to see what happens. Henry, we want to find out more about you. Your website. Where's the best place to connect with you?
Two things. One is afund.com, afund.com. And on July 15th, we'll be posting our mid-year forecast in detail. It's like 40 pages of information, well packed. And I think it's worth catching, but you don't have to catch it live. It will be on YouTube afterwards.
All right.
Henry, search.
Excellent. Hey, Henry, appreciate you coming on. Any questions or comments out there? Well, obviously, if you're watching it on YouTube, please put the comments up and we answer most of them. You can email us, kl@kerrylutz.com, and that's kl@kerrylutz.com. Let us know what you think. Henry was pretty straight on for when we talked to him last time. You think he'll be right this time? And go to the website, financialsurvivalnetwork.com. Take a look at our site and sign up for a free newsletter. Henry, a pleasure. We'll talk to you again real soon.
After August, we'll certainly be happy to do so.